the CLS Market Review for the week of September 9th, 2013. I'm Matt Harwell. We'd like to begin this week by announcing changes to our video market commentary. Moving forward, we will provide a shorter weekly update with targeted commentary on current events. We will then provide a more detailed monthly market commentary as we review what has happened in the markets and how CLS is responding. Our quarterly update will continue to dive deeper, looking at how market events have impacted CLS investment themes. Our PDF and podcast will continue in their current form. This new video format will provide balanced insight from our investment professionals throughout the year. Equity markets advanced last week as fears surrounding U.S. involvement in Syria began to lessen. The August non-farm payroll report was modestly disappointing, although it was enough to bring the unemployment rate down to 7.3% from 7.4%. The primary force driving the unemployment rate was a decline in the participation rate, which is at its lowest level since 1978. 10-year Treasury rates briefly crossed 3% for the first time since July of 2011, and bond prices fell steadily Monday through Thursday as positive news surrounded the service and manufacturing sectors. The 10-year Treasury has jumped from its record low of 1.61% on May 1st. Here now, with a special look at the technology sector, is CLS Senior Portfolio Manager J.J. Schenkelberg. J.J.
Thanks, Matt. 5 key areas of research are described in the CLS Investment Methodology White Paper as our focus for investment decisions. They are economic, fundamental, valuation, statistical, and technical. One sector that has been particularly attractive on all fronts is technology. Today we'll review a few of the 5. First, the fundamental case for technology is positive. Fundamental analysis looks at the financial strength and viability of the investment. Sales and earnings have been rising steadily for technology companies since 2009, surpassing pre-recession levels. Total debt to equity is well below other companies in the S&P 500. The days of technology companies with no value and high debt are long gone. The bursting of the technology bubble in early 2000s has weeded out the weak leaks and left the stronger companies to compete. From a valuation perspective, technology companies are arguably the cheapest sector in the market at the current time. The following graph illustrates the price-to-earnings ratio of technology companies versus the Russell 3000 index. Valuations have come down considerably and currently sit well below their historic average. Technical analysis is the review of performance versus the asset's peers, as well as the trending patterns associated with performance. Technology stocks have underperformed the S&P 500 index by almost 14% over the past year ending September 5, 2013. Underperformance was driven largely by declining optimism regarding Apple's ability to produce innovative products and growth going forward. However, over the past month, investors have begun to capitalize on low prices and driven the technology sector to outperformance by almost 2%. Given historically low valuations coupled with strong fundamentals, technology stocks are selling at attractive prices. Strong signs of recent momentum are making the technology sector ripe for the picking. It may not be a dot-com boom, but it has the makings of some attractive returns from a solid base. Now that's an investment I can like.
Thank you, JJ. And don't forget to like CLS on Facebook, where we provide timely updates and offer a glimpse into the culture and volunteer work of our team. In this week's PDF and podcast, we'll further discuss technology, looking at the economic and statistical fronts. Also, I invite you to join me on October 1st for the debut of our new monthly market review. Until then, please join us each Tuesday for insight from our investment professionals. That concludes our update for the second week of September. For all of us here, I'm Matt Harwell. Thank you very much for your time and trust in CLS Investments.